Just a quick question here from Tudor asking with regards to some of these case numbers, the various numbers and the entries. Is it viable to also jump in at market if the numbers are bad enough, if the percentages jump sky high? Do we need to wait for a pullback, or can we enter at market? And you can certainly enter at market with some of these announcements, Tudor, definitely. The only thing that I would add to that is make sure that the announcement hitting the wires is strong enough to really move the markets. Obviously, you don't want to be selling or buying at a compromised position, like a strong support area. But I mean, if the sentiment is strong enough, then that area should fold, and you should see some downside or upside, obviously depending on what type of sentiment shift you're trading. So you can definitely always consider entering at market. I think the one thing that I would just guide on as a general guide in terms of these types of moves is always just have a broader idea of where not only your the instrument you're trading at is trading, but also the other instruments involved with that. So, for example, when we were trading at that S1 level, that S1 pivot, and this most recent support area for the Aussie versus the US dollar, at the same time, we were also trading right on top of the lows in the S&P from yesterday's session, as well as right on top of that daily 200 moving average. So always just be conscious of the overall environment with where the market is trading. If you're trading something that is risk sentiment based, but majority of everything is at very key support levels, for example, then from being a more conservative trader, I would prefer waiting for a break and a retest of some sort, even if that means dropping down to something like a 1 minute time frame. Waiting for a break and a retest, or a break and a retest to enter. Those type of structures really work well. And even looking at that initial move to the downside, there's also, if you just drop down to a scalping type of move, there was also another short-term entry to take from that break of the previous lows. So there's many ways that you can go about it. Entering at market is definitely nothing wrong with that, especially being an experienced trader like you are. You've been trading with us for a while, so you know exactly when something is going to be big enough to move the market. So at market entries, perfectly fine, nothing wrong with that. For just as a general guideline, always just keep in mind where the rest of the market is trading in terms of key levels of support, key levels of resistance. Just being mindful of where the market might be acting, as a little bit of a sticking point, so to speak, with some of these levels. But yeah, absolutely nothing wrong, Tudor, if you see the opportunity to enter at market with some of these sentiment shifts.